Hello and welcome to Switzer Investing TV. I'm Peter Switzer. Thanks for joining me. On tonight's program, we have Junbei Liu of Tribeca Alpha Plus and Mike Gable of Female Equities to look at the charts. And I've got both experts looking at a number of companies. So we'll get the fund manager's view from Junbei Liu on the following stocks: Paladin, BHP, Perpetual, Corporate Travel, James Hardie, Neuron Pharmaceuticals, Life 360, and Megaport. And then we'll get Mike Gable to look at the charts to see if we can get two views on these particular companies, which might either say buy or not to buy. That is ultimately the question for tonight's show. So without any further ado, let's kick off now with Junbei Liu of Tribeca Alpha Plus. Thanks for joining us, Junbei Liu.
Thank you. Always great to speak, Peter.
No problems. Let's go. I gave you a list of stocks that a lot of the subscribers to the Switzer Report are curious about. It shows up when we do Boom Doom Zoom on Thursdays. And the one that had a spectacular up and down week was Paladin. What's your view on uranium generally and this stock specifically?
Look, honestly, I do think that I do like uranium space. It is probably more long dated. I know the price has been very volatile, but uranium is something that, for our digital future, whole economy is turning digital. We do need a form of, way to generate power for the future to, power up all our data centers and the like. So, uranium seems to have a very important part to play in that whole ecosystem. So I do think uranium is quite a good part of any investor's portfolio. Paladin itself, look, it's got some issues, more company specific, and it is still quite expensive relative to others, in terms of the valuation. I myself, I like the Boss Energy. That one's actually underperformed the sector quite a bit. It certainly looks like it's due for a rebound. But I think the whole complex does look like they reminded me a little bit of the lithium before they started their rebound. So, they are due for a rebound to come.
Okay, let's go to a company like BHP. I like it on a 12-month view. It's clearly been frustrated a little bit by the lack of Chinese stimulus to the extent that the market wanted. But is this a smart 12-month play?
Yeah, look, absolutely. I do think that commodity companies, even though they had a bit of rally and they all sort of faltered away more recently, given China's stimulus is never big enough. Look, I think they absolutely look. It's probably the cheapest it's ever been if you look at the sort of cash flow it's generating with where all the commodity prices are. As I know the share price for near term will be more or less driven by what's happening in China, but China is turning it just slowly, and the stimulus it's consistently coming, but just smaller packages. So look, I think it represents a really good buying opportunity, especially for those large diversified miners. You don't take, a lot of risk like the smaller miners do.
Okay, let's go to the next one. And this is an interesting one. It was mentioned by Chris Cortis at the SONS Hearts and Minds conference. Perpetual. Now, Perpetual has been an unbelievably disappointing stock, but he had a view on it that, well, it's going to get rid of its trust and its wealth business, and there'll be $1 billion left over. What's your view on Perpetual?
Look, I think it's hard. I always believe when a business is selling, it's the best quality, best asset. It's always hard to see it shrink into greatness. And then I know Chris's argument is about, look, it's in outflow, but every fund manager except one or two not in outflow. But that's not good enough reason to buy it. When when a company's earnings shrinking, it's hard to put a proper multiple on it. I think Wallace at the moment it's doing okay because of the share markets going higher. I do think much rather to put in the winner like GQG if you want to buy a fund manager.
Yeah. I must admit, I covered it objectively, but I must admit, I don't think I'm going to invest in Perpetual.
Not at all.
And let's go to corporate travel. Now, the travel stocks really copped it over the last few months, but last week, it looks like all is forgiven. They all went up. So
Yeah.
what do you think's behind this, reloving of travel stocks?
Look, I think people has forgotten that even though the share price has come off with some quite a lot, but the earnings is actually not too bad. These companies are generating growth. Now, corporate travel is a bit different. They've got the government contracts and life, but in general, the sector itself has gone through multiple years of great earnings growth, and now they're still growing, but it's just slower than what everyone is expecting. They're not expensive. The whole sector is not expensive. For me, the easier one is probably Fly Center. The company is still growing, quite meaningfully. In October, it's up 30% in terms of profit. Of course, just 1 month, but the momentum is still pretty strong. It's trading on less than 20 times earnings. So for me, it's an easy one to play. Corporate travel is great. Well, it's a good company. Only thing is recently just gone through a lot of changes, and there's a couple of contract risk in there. Just a little bit harder. But I think the whole sector really has been thrown out by the investors, prior to last week.
Yeah, and it seems to me that there is actually a structural change in human beings such that they are more addicted to travel than ever before. And I think it's just going to get worse and worse, or better and better, depending on your view. I just think, like a friend of ours has been complaining, no, worrying about interest rate rises for the last 12 months, begging me to say the next rate cut is just around the corner. And each time I have to say, well, no, I don't think it is. We're going to have to wait. We're going to have to wait. And despite the fact that she's been so worried about interest rate rises, she's gone to London. She's flying premium economy. This is not,
Exactly.
that's right. This is not an Australian being punished by the Reserve Bank and who's suffering like they used to in the 80s. When interest rates went to 17%, my
Yeah,
wife and I, we gave up heaps of stuff. We
that's
did
right.
go overseas.
Yeah, absolutely. If you look at the travel stats out of Australia, Australians love to travel, and we love to do outbound travel around the world, and that has never changed. So it's actually a really, really defensive sector that people just travel year in, year out. In tough times, travel a little bit less, but they still want to go. And there's always a catch-up period where they travel a lot. So it's actually a really good space to be.
Yeah, well, my default situation is when Europe becomes far too expensive, I'll go to Queenstown. New Zealand's always cheaper, and Queenstown's like being in Europe.
That's right. Or Japan.
Or Japan. Okay, let's go to our next one. James Hardy. What's your view?
Look, that's a buy. It's quite simplistically. The earning was really reflective of what happened previously. Looking forward, the rate cuts already started in the US. They already cut 75 basis point, and one more to come the end of this year and more next year. And usually the earnings start to turn for James Hardy, like sort of cyclical. It's between 4 and 6 months after first cut. So it's really bottom. You're really heading into growth, and it'll be most leveraged sort of cyclical company into the rate cut in the US.
Yeah. Here's one I didn't know much about, but over the last few weeks, it's got on my radar screen. I think I had a pretty good week last week. Neuron Pharmaceuticals. Do you know much about that business?
Look, I actually been following it for about a year or two. It's a great business, and then a great business as in they've got this this drug that's already selling quite well. One of the biggest problem is that when it first commercialized, which was probably 18 months ago, people put these huge expectations into it, and then so it's been disappointing ever since. And now recently had a positive announcement. It's well welcomed. So, but for me, it is still a little bit harder. It's de-risked, but as a biotech, when when you start making money, people start making those projections, then the chances that people probably still too bullish in terms of what the expectation is.
Yeah, be careful you're suggesting, aren't you?
That's right.
It's not a warning that I usually get from you, June Lou, so I'm going to take it very seriously. What about what about Life 360? This one goes up, it goes down. I think the longer term trend, it has been a nice rise. But what's your view on Life 360 right now?
Yeah, Live 360 is something that you want to buy on every dip. So, recently, the share price has gone up so much into the quarterly result, and the result came was in line expectations, so share price down a bit. And then the owner, the CEO sold a little bit of shares, which he told people 12 months ago. So sort of always drive a bit of disappointment. And then, history has shown that every time when there's a dip, this is proven to be a really good buying opportunity. I think the company hasn't really changed in terms of its growth trajectory. It still is enormous, and it's still very cheap in what it could achieve in terms of the growth, the revenue realization, the advertising model. I think this is a buy on the dip.
And finally, one of my favourites that's been struggling, but it's had a nice week or so, namely Megaport. What's the latest Junbei Liu take on Megaport, MP1?
Yeah, that's right. So look, we always agree, both you and I, we like this company on a 12-month view, but what we recognize in the short term, there's a bit of earnings headwind, and the green shoots. They hired all these salespeople, and they haven't been able to generate the sales uplift as they hoped. So, and then the new CEO has been talking about reinvestment and the like. So a bit of state of flux at the moment in terms of earnings. So look, that hasn't changed. It did surprise me. Share price started rallying ahead of it. Maybe investors looking past it, but all I know is that this company does sit in the right place within that whole AI trend, uptake, and we do have to see their update to come through, whether there is green shoot. Otherwise, there might be a little bit more serious issue to be asked. But we do like it. Maybe just investors not looking past the short-term earnings volatility.
Yeah. These are every time you look at a company like MP1 or Ordinate, you think about Zero, and of course, Zero's killing it now. But there are times when the market was anti-Zero, and eventually the market comes to recognise that they're good quality companies, and I suspect that's going to be the case for MP1. But you have to be patient.
That's right. That's right.
Okay, Junbei Liu, as always, great to see you. Thank you.
Great to see you. Thank you so much.
And that was Junbei Liu of Tribeca Alpha Plus. My next guest is Mike Gable from Fairmont Equities. Let's cut to the screen right now. Thanks for joining us, mate.
Thanks, Peter.
All right, so a number of interesting stocks. I got Junbei Liu to actually go through for her view on these companies, but I really do want to see what the charts are telling you. As we always do, let's kick off with the industries. The first one, the local market. It's done pretty well considering we haven't got those interest rate cuts that we were looking for. What's the signs telling you right now?
Well, as much as some people would hate it, it's still trending higher. It's not.
You've been saying, and you've been right. Let's give you praise. If you're wrong, I'd be bagging the crap out of you, but you've been right.
Thank you. Yeah. So again, as we've spoken about previously, there was a big level here around 7,600, and ever since breaking that, it's been in an uptrend. So that's not to say we don't have some pullbacks along the way, but at the moment, our market is trending quite nicely.
And the trend is your friend until it bends.
Exactly.
Exactly. We all say. Okay, let's go look at the US market. I'd be surprised if it's very different. S&P 500. Let's have a look.
Yeah, so this is a daily chart just since the start of the calendar year. Again, trending higher. I mean, you get these pullbacks along the way. Look, it has been a bit volatile since the election, of course. I mean,
you mean to say Donald Trump could bring volatility?
Who would have thought? So, look, it was starting to fall away just before the election, but then, Trump's victory reversed it. We've sort of given back half those gains. I wouldn't be surprised if, we do come back a little bit more. But again, ultimately, we still have an uptrend. I don't see any major warning signs at the moment. So again, just stick with that overall trend.
Yeah. And let's face it, Trump's not going to come out and say, those tariffs, I'm going to use this as a bargaining chip. I'm not necessarily going to raise them by that amount. I'll use it and try and get a lot more of concessions out of Europe and China. And I might not have to use it. The market would love to hear that. But he's never going to say it because he'd be giving away his whole strategy.
Yeah, and I mean, and of course we'll continue to have these conversations until next year, and that'll give us an element of uncertainty. But overall, if the market's trending, everything's looking great, and a bit of uncertainty gives you some dips along the way, then you can use that for buying opportunities.
I'll make an early call here. I reckon it's going to be one of those years when it's sell in May and go away. Could work considering the timing,
Yeah.
negotiations, but we'll cross
We'll
that
have a look.
bridge.
Yeah, we'll have a
We'll
look
cross
at
that bridge. I'm happy to be a player at least until March or April next year. That's for sure. Okay, let's go to our individual stocks. And Paladin's really had a volatile run. You've been
Yeah.
a big caller on Paladin. I'm sure some people thought you were a genius on your many calls of Paladin.
Yeah.
You got a little mini call, right? And then a recent sell-off. What's the feeling now?
Yeah, definitely a tale of two halves. When we looked at it last year, first half of the year did fantastically well.
Yeah.
Second half of the year, not so good.
Yeah.
Not so good, given back all those gains and a bit more. So there's two ways to look at this. Ultimately, I think the sector longer term still has a lot of upside.
Yeah.
If you're a bit more conservative, you'd look at this and say, well, it's in a downtrend.
Yeah.
You need to see an uptrend established before you get in. If you're trying to be a little bit more adventurous, then to me it looks like it's bottomed out.
Yeah.
So sometimes with stocks, they'll top or bottom out. Usually you get sometimes this sign of exhaustion on the downside, or you get this sort of fear of missing out peak on the upside. So in the case of when a stock peaks, sometimes you've got a lot of investors on the sidelines watching a particular stock. They continue to miss out, and then eventually just the fear of missing out drives them in up at the top, and that's the peak. And the opposite works on the downside too. So you've got a lot of investors who have been wanting to sell, but couldn't bring themselves to do it, and eventually they just give up, dump the stock. And the way to identify those lows is when you get this sort of big move down, big volume, but it doesn't actually follow through on the downside. And that's exactly what we've got here. So at the bottom here, I have a volume chart. So a huge spike last week as Paladin hit its lows for the year. Largest volume we've seen all year, of course.
Yeah.
But instead of continuing to the downside, it jumped up the next day with what looks like the second biggest volume of the year. The second biggest volume of the year. It's hovered for a couple of days, and now it's starting to move higher today on big volume. So it looks like that's an exhaustive low in terms of charts. Most likely that's a reversal here, and you could expect to see a pretty
if a
good
relative
recovery.
you liked asked you, I think Paladin's worth a buy at these levels, what would you say?
For my clients, I like to see more of a trend because I'm not going to take these sorts of risks with their money. Me personally, a couple of days ago, I was buying quite a bit of Paladin. So look, I think that with everything happening in that sector, this is a great opportunity.
As long as you're a buyer and holder, this is probably a reasonable entry.
If you've got a 12-month view, I think you'll do very well.
Yeah, okay. Let's go to corporate, BHP.
Yep. So obviously it's, first sort of 9 months of the year pulling back. We had that huge increase there in September, only for the shares to give back.
China stimulus, China not impressing that stimulus.
Exactly. But what's very interesting is this peak in BHP right at the end of September was the low in the US dollar for the year. So as soon as the US dollar bounced from the start of October onwards, and of course it accelerated. And of course, it accelerated after the election. That coincided with this pullback in BHP. So the US dollar
prices do better on a lower US dollar.
Yeah, exactly. But when I look at the US dollar chart, it's hitting a fairly major level from here. So there is a decent chance that the US dollar gives back some of those gains. BHP finds support here and starts to head higher. Also, just looking at these moves, what's interesting is to look at the timing of the moves up and the timing of the moves down. So at this point here, so the last time BHP was around $40 was here in September, and we can see that in 5 days it went from $40 to 46. Now it's taken BHP a month and a half to retrace only 5 days worth of gains, and it's been on lower volumes most of the.
Is that a good sign for you?
That's a good sign. So I'd be looking for a reversal in the US dollar potentially in the next day or two. Not a prediction, but I think there's a high possibility now. And then that
I'll
would-
give you
that
three.
would be
I'll give
the-
you 3 months.
Yeah.
In 3 months, I reckon.
Just
US
give it a few days,
Yeah,
but I think BHP will head higher from here.
Yeah. Okay. Yeah. Tick from me on that one. Let's go to an unusual one. Perpetual.
Mm.
The chart.
Yeah.
I'm not surprised the chart looks like this, and we know that Chris Cordes at the Sons and Hearts and Minds conference back perpetual, which surprised a few people. But I tell you what, the chart's not saying get in.
I've brought a monthly chart along. This goes back 20 years. Look, in the past several days, it has jumped higher. I mean, maybe for these reasons, but
a lot of publicity.
yeah, let's just zoom back a bit and have a look at what it's done since the GFC. Really, that's pre-GFC $80, and it's essentially been in a downtrend the whole way.
And by the way, the management wasn't great then either. But it's just got worse and worse.
So I look at a chart like this and say, look, unless there's a huge catalyst coming up, I think money's better elsewhere.
Yeah. So this, from your point of view, the charts aren't reinforcing Chris's view. Chris could prove to be right. He's often made some big calls and got it right. But at this point in time, there's not a real lot to say, yep, jump on board, unless you're a speculator and you just want to follow a pretty smart guy.
Yeah, if you've got a shorter term time frame, you might get a little bit of a bounce here. But if you're looking, say, 5 years away, you don't have a trend. So you need it all the way up here, and it needs to be trending.
They do have a new CEO. Okay, I think Bernie Riley came in October or something like that. But still, it's a speculative play. Let's go our next one, and that is corporate travel. Corporate travel. Like, travel stocks have been copping it, haven't they, this year? And last week, all's forgiven.
Yeah, look, I mean, with corporate travel, it's starting to come to life. So this is a weekly chart going back a few years. So essentially, if we have a look at what it's done recently, in a downtrend, you have lower lows, lower highs. So to break that, it needs to start making, the higher highs, the higher lows. So we could see that we had the low here a few months ago, made its first higher low, and then it looks like that's last week, it's made a new higher high. So it looks like it's starting to develop an uptrend. Ideally, you'd like to see another one or two of these higher highs, higher lows. So early signs it might be turning around.
I did notice that Flight Centre and Webjet, they've all benefited from it. Is there a travel stock that you actually have supported for your clients?
Not at the moment.
Okay,
no.
Right. Let's go to our next one, and it's Neuron
ahead.
Pharmaceuticals.
Yeah. So this, I mean, when at first glance you could say, okay, well, it's got a trend to it. This is a weekly chart going back a few years. The higher lows, the higher highs, but obviously it's been, the trading ranges have been huge. So we're talking, $26 at its recent peak, almost back to what looks like $12.
Yeah.
There was a huge move up there a few weeks ago, which is positive, and we could see that the stock has done this before and it's kicked on. The problem is, if you were to buy here, you have to think of the possibility that it does break that low and continues to head lower. So what's your risk reward? Well, if you're buying up here at, say, $15.60 and the recent lows at $12, it could ease all the way back to $12 and it would still look okay on this chart, but you'd be, you might be down 20%. Do you want to wear that? So after a big move like that, it's hard to chase it up here. I think ideally, if you're looking to buy it from a charting point of view, if it could cool off a little bit lower, then at least you've got your stop loss, if you're doing those things, is a bit tighter, and that gives you a better entry point. But I think if you're holding it, given that move up, and if you're not looking sort of short term, it looks like it's on the way to
some interesting stocks we're looking at, really, aren't they? Where there's no clear-cut view on what you should do. Let's go to James Hardie. I'd be surprised if this is not looking positive.
Yeah, look, I think longer term, it could be interesting. It's definitely received a big bout of sort of volatility this year. This is one we've sort of been in and out of. We're just out at the moment. Obviously, it had a result last week, which the market liked more than the analysts seem to. But I have noticed that, since that peak there, what was that, late last year, early this year, from the bottoms earlier this year, it has made a higher low. So the diagonal line shows that it's, it looks like it's getting some good buying support here, but unfortunately, it's making lower highs, and we are seeing selling, every time it does rally. So I think what will happen is you might just see it head sideways a bit longer as the range converges, and then it might be ready to go. So obviously, James Hardie nowadays has the bulk of their business in the US. Housing starts, US interest rates are a big deal for James Hardie.
Yeah.
And clearly over the past couple of months, we've had obviously rates come down, but the bond yields going up. And you've got this sort of, I guess, discrepancy between what the market thinks will happen and what the bond market thinks will happen. And it's...
And isn't it interesting? Because the US economy is looking a little bit stronger than we expected, they're now saying, well, there'll probably be less interest rate cuts. But if the economy was really looking crappy, they would have needed more interest rate cuts. But a crappy economy is not necessarily good for building, is it? So,
Exactly.
So, but there is a bit of a to and fro in there. And I suspect James Hardie will do okay over the next year or two, because I think the US economy will do pretty well.
It's one that I have on my watch list, and I think when the time's right, this will be a good one.
We're probably getting close. 360, very volatile stock, but look, the trend is up.
Yeah, great trend. So again, you've got your high highs, higher lows. These are the sorts of stocks you want to be in. There's a couple of blue lines here that are moving averages. I've noticed that the first line here is a 50-day moving average. So we could see that since this stock started trending back in February, it goes for a bit of a run, comes back towards this sort of 50 days. Sometimes it undercuts it a bit. And the next line is the 100-day moving average. And then it sort of continues on. So we could see a bit of weakness today. It's come back towards the 50-day moving average. So you might be looking at a potential buying opportunity if we can see it turn around. And the good thing about this 100-day, as we could see, it's respected it very well. That 100-day moving average is in the high 18. So what you could do, the strategy could be, okay, well, if it pulls back here towards 21, I'll use this 100-day moving average in the high 18s as my stop level. So I'm happy to buy it, but clearly if it falls under this line, I know that's the time to sell it because the uptrend is over. So just a bit of a strategy for 360.
Okay, one final one is Megaport. And it's had a terrible run. One of my favourite stocks of the future. Do you think we may well be past the worst?
Possibly, because again, we've got, with the lower lows and lower highs, we could see that the recent rally has now made it go above this previous high level here. So it's managed to crack that sort of resistance level. I don't know if it would necessarily go anywhere in a hurry, so maybe not in the short term, but that's definitely a sign. It's a positive sign that it could be finding a low. It would be one to, at the very least, keep an eye on. It might need to do a bit more sort of sideways and just work through all the trapped sellers who, basically the people that bought around here thinking that drop was an opportunity. So, when they get their money back and they're gone, then it will be ready to recover. So good early sign for Megaport. It doesn't have an uptrend yet, but it's encouraging what it's done in the past 2 weeks.
Okay. Your overall feeling for stocks in 2025?
Yeah, I'm positive. I think that, the trend at the moment, the market is trending. I can't see why that wouldn't continue. There'll be pullbacks along the way. But at the moment, obviously with what's happening in the US, I think generally that's a positive for markets. Here on our market, we have a lot of commodities, but I still think that we've got a good time for commodities ahead of us. The US dollar from here, should head down. That's a positive for commodity stocks. I think you'll get a reversal in gold from here, and gold will head back up again. So even in the short term,
All right,
gold's
one last question before you go. What has been the stock that you've recently recommended to your clients? Has there been a standout one, or is it
I think the best stock we bought this year for clients was Pro Medicus in around February, just under $100, which was apparently still too expensive, but that's now, you know, a bit over doubled, which is great.
like, is it too late for Pro Medicus? Is it too late for Bitcoin? Is it too late for gold?
I think
there's all the questions that people are always asking me as well.
Yeah, look, as long as it's trending, you just have to find those little dips, and there's always a risk that that little dip turns into something bigger and you've bought near the top, but you just need to have a stop loss strategy. So whatever we buy, we have an initial stop loss and a trailing stop loss, and we just obey that to make sure that we're out before things get potentially, you know, a lot nastier.
Okay, great stuff. Mike, thanks for joining us.
Thank you.
That's Mike Gable of Fairmont Equities. And that's the show for this week. Thanks for joining us. Don't forget, if you want more information on how to invest from a team of experts, become a subscriber to the Switzer Report. That's tonight's show. Thanks for joining us. See you next week.